All right. What is going on, everybody? Jonathan Farrell, Two Mortgage Guys podcast. I'm here with Lottie Sanchez, the man, the myth.
Okay. The leyenda.
The leyenda.
For those that habla español. No, I think it's funny how millennials, are just zoned in on the interest rate, which is fine, you want the best payment possible. But that's the funny part about it is that but they don't want the best payment.
Right.
They want the best interest rate.
Right. You know what's funny?
And the best looking loan officer. It's like, dude, sorry, I don't have the best interest rate or the best looking. I'm joking. No, but, it's like, well, we only got one of those.
Did you see him?
But
dang you!
But the funniest part about it, right? So
right.
so you get a client, you give them a 3.99, right?
Right.
And interest rate, and they're just kind of talking to the wives, like, man, so and so got a 3.875 or whatever, right?
Right.
But then they go get a house that's like 2.1% in taxes.
Right.
And it has a hero program.
It makes no sense. Got a hero program.
Okay, so you're okay. Instead of paying $450 in taxes in this area, you're going to pay $600, but you're complaining about this 3.99.
Right.
It's
I will say it was
really
funny because we just had a client that was shopping us due to APR. Literally, our interest rate was lower, but because that company threw in a super low mortgage insurance quote, our APR was higher by 0.1.
Right.
And it's when it comes down to it, once it goes to underwriting with MI, they're just gonna raise it back up to where we had it in the beginning.
Right.
So it doesn't matter.
Do you even know what APR is?
Yeah.
Those are my initials.
Right.
So, what are you talking about?
It's I don't know anybody by the initials APR.
Question then, if interest rate isn't most important, which I agree it's not. If it's not important, what do you think buyers should be looking for? Because we're all millennials in this process anyway. So
that's a good question. No, I think if you're doing a refinance, to some extent, you can argue that you don't need the good-looking loan officer. The bells and whistles. You just kind of need the lower interest rate,
right?
And maybe somebody that knows how to work the numbers to where it benefits the client,
right?
Or at least showing them different options. I think that's good enough for a refinance, right? But for a purchase,
you need somebody that knows what the heck they're doing.
Oh man, there's so many little things and little attributes they need to have that if you work for a big bank, you're not going to be available on Sunday and the inspection. Something. I think the thing is that if you're someone that a loan officer that just sits behind an office Monday through Friday, there's so many things that they're missing, and not only that, but real estate and lending clash all the time.
Right.
And loan officers want to stay on their side, which is. Sure, that makes sense. But a lot of the times, in order to be really good at what you do and really guiding the client, you have to clash with the real estate side.
Right.
And explain to them, hey,
this is what the inspection is. This is what's going to happen.
What the appraisal is.
Right.
This is what this is. Why are you putting this EMD? Explain to them what escrow and title is. Really kind of go through the whole spiel.
Right.
And that, I guess that's what I'm trying to get to.
Well, it's funny that you say that, because a lot of the times, I'll straight up tell people whether or not I have the best deal or not. If somebody's shopping me, I say, hey, give me a quote. I'll tell you if I'm the best deal. But what typically happens is you got somebody that goes and gets a deal from a bank and they're like, hey, they're beating you by, let's say, a couple dollars, right? And it's okay, so that couple dollars, that bank's going to take 2 to 3 months to drag out your refi. Over a couple dollars, we can have it closed within this, save you a whole bunch of money, and make sure that it gets done within a relatively timely manner. And you're going to have full access to me. If you need to know what's going on, you got my phone number. Here's my cell phone number. Text me at 10 o'clock on Friday, and I'll let you know.
Well, ultimately, I think it's an emotional thing.
Right.
Because I've had it to where, some clients, and it sounds dumb and stupid, but, in most cases, I've texted someone back immediately, or I picked up the phone where I was at lunch,
Right.
And if I wouldn't have picked up that phone or sent that message in 10
minutes,
it. I would have lost it. That has nothing to do with interest rate. That has nothing to do with, it really has nothing to do with
service.
Other than it's an emotional sport.
Right. Customer service wins 9 times out of 10, for sure. They're going to have
100%.
that one person that's going to say, you know what, I'm just going for the lowest possible payment or the lowest possible fees. And in the end, they end up paying more for it.
Right.
They end up paying more for it.
And you nailed it because, you know, we always talk about winning. I'll tell you when I lost. I just lost one just recently. One of my agents gave me a client. He was already talking to a lender. And, you know, I was hounding him down, emailing him, texting him. I hadn't talked to him yet, right?
Right.
That's probably why, you know. Oh, well, my finesse only works. My magic only works if you talk to me.
Get me on the phone. I'll close it.
Just didn't count. I didn't get him on the phone. No, but you know, and ultimately after bugging him, he's like, "Hey, Lottie, I just want to, you know, just let you know that I've already been talking to a loan officer."
Right.
Right. And, you know, and that's why. And I even said, you know, I said, you know what, I'll pull my pants down. Like, I'll even give you a better payment, which is, I don't even know if that's true or not, but I was going to make it happen some way, somehow. I was going to make that happen. That still wasn't good enough.
Right.
That still was. And so it goes to show that this is an emotional sport and service is going to win any time of the day because that other loan officer was good at what he does as well. And I already had built that rapport.
Set the relationship.
I've already set the relationship.
Right.
You know, the second opinion didn't even matter, even if it was a lower payment, which I thought was pretty powerful.
Right.
Yeah,
well,
sometimes lower payment doesn't mean that they're saving money. Like he said, I mean, you have per diem charges. If it goes into next month, you might be paying more taxes, prorated. If you're establishing impound accounts or you're doing other things, right?
Right.
Because if the loan officer is giving you a lower payment, but they might not necessarily know what they're doing.
Well, again, too, like.
Well, I think where I messed up, I didn't ask the client who he was working with. If he would have said, "Oh, Jonathan," it was like, "Oh, okay, well that makes sense."
That makes
like,
more sense. Yeah, I mean, I build a pretty strong relationship with my. No, but I mean, the thing too, like with us, I'm gonna tell you straight up if I'm beat or not. I'm gonna tell you which one's the better deal.
Right.
But ultimately, in the end, me telling the client that also builds more rapport with them, where I'm going to get more in the future.
Well, right.
Right.
Where they go through the loan and yada yada, and X bank, you know, doesn't qualify them at the end, or they find out something and then they get back to you and be like, "Hey."
Well, the crazy thing too, I go back to that deal. We talked about it before in the podcast before, but like where they go to a Chase Bank and they're like, "Hey, Chase Bank is my bank. I'm going to be able to get this through." Goes, 30 days, finally gets into underwriting, and then Chase just declines them.
Right.
A perfectly good borrower. The problem was they're self-employed and they don't know how to read self-employed tax returns.
And agents probably know that by now. I mean, it's not just Chase. Let's just throw everybody under the bus right now. Chase, Bank of America,
Wells Fargo.
I mean, we're not just naming names that we know.
We're gonna get a couple lawsuits
that
here.
We had, that clients have had bad experiences with, and they come to us for help.
Right.
Wells Fargo.
But also, we are masters of our craft to where we could say, "Hey, look, let's take a look at this program. Whether it's a 1-year self-employed program, that's going to get you to qualify. Let's take a look at adding a cosigner."
About it though is not even difficult stuff.
No.
It's not like, "Hey, Lottie, I need you to do a straw buying experience." Like, it's like simple stuff. It's like, okay, what were they doing? Oh,
how do they qualify?
All they have to do is this.
Right.
They're like, I guess.
Yeah.
Right. It's like.
But I'm not going to go call that person and tell them how to do their job. Yeah. I'm going to be like, "Look, I'll take it over."
But I'm saying it's not like, they did all these things and they tried that and they tried this and then I have to look at it and I'm like, "Oh, dang, okay, let me see if I can try this." Right. No, it's usually like,
man, they missed that.
Oh, I see what they're doing. Did they do this? And the agent or the client, they're like, "I don't know." It's like, okay, well, that's gonna fix it. You just have to press this button.
So my favorite,
surprising. It's like, what the heck?
I will say my favorite thing is when we do have like a client that is a past client that refers a family member that was previously declined by like another lender, and when we're able to take that over and close it because it was something that was like, just do this and it's gonna make it work. Like then you build that whole family rapport. Like the one client, it was like, I did the brother's loan. Now it's got 2 of his other brothers that want to buy. Now it's like, okay, now I'm able to build rapport with these people just because I did a good enough job and was able to take care of this client here.
100%.
So like for us, I would venture to say we're definitely not transactional loan officers.
No.
Like most companies and most people, not most people, there's a lot of good relational loan officers, but we look to establish a relationship.
Transactions are easy, and I've always said that. Transactions are super.
Exactly.
Loans are easy. Real estate is easy. It's the other stuff. It's the other magic that it needs to happen
Right.
in order to make everything else work well.
Like, we're going to make this work, and we're going to work on building this relationship for future. I mean, that's the way that I take a look at it, especially with all my clients. Like, all my clients know, like, hey, look, here's my phone number. If you need anything, call me. If you have any questions, call me. Like, I'm here for you. I want to get this taken care of for you. And I want to get you your first house or your second house or your investment property or whatever. Like, I want to be the guy that's going to help you do this.
Right.
And we build that rapport with people. So that's what, I mean, for me, the thing that I love most about this business is the relationships that I'm able to build, especially when it comes down to somebody's first house purchase or getting them into the home buying process, right?
Right. No, and it's true. Like for relationships, I win on relationships. Like,
Yeah.
you know, like, and I guarantee you, most loan officers out here in the Valley do not.
No.
And I'll give you a clear example. Like just not too long ago, I had a client, did not qualify. I did everything I possibly could, did not. And I told him like 4 times, right? And he's like, oh, what about this? What if my mom's a cook? Oh, what if we did this? What if we did that? And it was like, you know, and we tried everything possible. Well, he referred me out 3 of his coworkers.
Yep.
And 2 of them went into contract and I closed. But it was funny because I didn't even do his loan. All I did was service him as much as possibly can. Didn't even do his loan. He to this day is still renting.
Right.
You know, but ultimately I went on relationships, and that's what you need to do. Like, when you have a mindset of like, you know what, let me try to just help. Let me just look at it.
Yeah.
Oh, you know, 4 other loan officers have already looked at it. You can't do it. It's like, oh, I'm not saying I can't. Just let me look at it. You
Yeah,
know, let
I
me
might
see
be
how
able
I
to
can
help point you in the right direction. Like,
and then ultimately too, and that's kind of why I kind of emphasize on the Hispanic market, which is funny because most of my clients aren't even Hispanic, but the Hispanic people that I do help, and it kind of overlays to first time home buyers and other people as well, is because, you know, if somebody, you know, I don't want to say any names around here in the Valley, but if other people were helping them, I would feel bad. If my parents were looking into getting a home loan,
Right.
and I wasn't a loan officer, I would feel horrible that they went to X, Y, and Z here in Temecula agent, and, you know, or Murrieta agent, and put them with Temecula Murrieta lender.
Right.
You know, I would feel horrible, you know, not knowing about the process, you know, because it's so generic nowadays.
Right.
It's so monotone that it's just disgusting, you know. And I know for sure no one would be, you know, having him. No one would be, you know, there to sign disclosures with them, or, you know, really
take the time to go through the process
having
with
them
them.
anticipate different steps, or
Right.
you know, none of the hand holding stuff that is necessary to get a transaction, to have an agent, or sorry, a client feel comfortable with the whole process.
Right. And that's important too, because, you know, especially with so many people who are buying their first home, they do need somebody that's going to take the time to go through the process with them, right? Take the time, give them a little bit more hand holding, tell them, hey, look, this is the process. My job is to help you understand the process and go through the process. And if I'm not doing that, I'm not doing my job. You know,
Yeah.
But the process never stops, right?
process never
I mean,
stops.
Think about it. You finish closing your home. There's things that happen after that.
Right.
Whether it's supplemental taxes or transfer of the loan.
Well, I'll tell you too.
Or get you ready to refinance and leverage your equity, right?
Yeah,
Yeah.
the one thing I will tell you, because especially for me, like, I want to be the guy that my clients know can say, you know what, let me call John about this. You know, so I got one guy that's bought 5 houses with me over the course of 6 years. And so every time he's like, hey, you know what, John might know somebody that does this too, even if it's not even within my profession. He's like, hey, who does this guy know? Because I trust him enough and I built that rapport with him enough to where it's like, hey, if John refers me somebody, it's going to be because he knows them and he trusts them, and anybody that he trusts, I trust as well.
Yeah.
So the fact that we could do that and that we could build that sort of relationship with somebody is awesome.
Right.
So, I mean, that's like my whole focus. The whole reason why I got into this industry is because it's the American dream for people to buy homes. Well, I want to help everybody achieve the American dream and help them get into homes.
Right. Well, even also, I mean, there's also another thing too, is that like people don't want to pay full price. People want to cut corners.
Yep.
You know, it's natural. You know, and I kind of do that in every day of my life. You know,
True.
like salesmen call it, ABC. You know, always be closing, yada yada. I post stuff on my Instagram and Facebook like how to get like free coffee, how to get free this. You know, and so when I help a client out, I'm like, hold it, yeah, you could do it that way, but how else can I see it to where I can save you money?
Right.
How else, with insurance, with mortgage insurance, with, interest rate, whatever it may be, how can
Financial
I
advisor.
really find a way to get creative? And it's not like, and it's just in everything that I do, really.
Right.
It's not just loans. It's literally shoes when I buy shoes or whatever. So
There's a discount code.
yeah, seriously.
Everybody go here.
But I mean, one thing I would ask is this savings. When people think savings, a lot of times people think instant, right? Savings aren't always short term.
Yeah.
Right? I think that's one thing with millennials, myself and all of us being millennials, is a lot of times we're looking for the short term gratification when that might not be what truly is where you're going to save.
Yeah, and it's tough. I'll be honest with you. Like it's tough giving options, especially to millennials, in where yeah, it looks good now, but this one is going to be a little higher payment, but you're going to be saving in the long run.
Yeah.
It's extremely tough to pitch that to
True.
Millennials, and it's
Especially
and
going
they
conventional
want,
versus
they want
FHA.
right now. They're not going to be, millennials. They feel like they're not going to be alive in 6-7 months, so they're like, ah, whatever, I'm gonna be.
It's true though. I'm gonna live now. I'm gonna get this now. Let's go.
Yeah.
So
I mean, I'm gonna get Stagecoach, partying, and then and Coachella, like, like I might not live after that. So it's like, but it's true. Like they look at things short term, and I kind of do too. As far as cash flow and stuff. So I'm kind of millennial myself.
What's an example that you've seen maybe where you've worked with someone that's a millennial generation where they've benefited long term rather than short term, and you've been able to help them see that?
taking somebody that's looking specifically for an FHA program and also saying, hey, have you thought about maybe putting the extra 1.5% down and go conventional? Because then you take a look at, okay, your payment's going to be, a little bit less, but overall, if you never refi again, your mortgage insurance will fall off after a specific period of time. FHA, it's going to stay on for the entire life of the loan, meaning you have to refinance it in order to drop that mortgage insurance. That's kind of like the biggest thing that I could think
it's
of.
Just basically upgrading every.
Yeah.
I mean, if you have the money, usually the rule of thumb is if you have the money, do it. If you have $90,000 and you're trying to look for a down payment assistance, it's like, wait a minute, hold on a second, just put the 20%.
This is not worth it.
If you have $50,000, look to putting in 10%, and so on and so forth. So
more like if you have the money now, pay it now rather than pay it later.
Well, not all of it, but a portion of it, a big portion.
The biggest thing is
even
comfortability.
With down payment assistance, you're talking about, how it benefits. Like you're going to create most of these down payment assistance. You create a second or even a third lien on your home, and so when you're trying to, refinance, so a lot of the times, most programs, even an FHA loan, is kind of like an interim type of loan to get a home. And so it's a temporary and it's a good introductory loan. But then usually you want to refinance a year out or so if the market permits into a conventional. Same thing with down payment assistance. You create these liens and after a year, you might have enough equity in your home to do really anything. You might be upside down. As a matter of fact, as you buy the house, you are immediately with the CLTV is a lot higher than what the home is worth already. So it's going to be a while before you refinance it. So you try to explain that as much as you can, but ultimately, I think you can only say so much to millennial, I guess.
Well, you can't. The biggest thing that I tell people is.
Quick question: when you say CLTV, explain to people if they don't know. People know what LTV is, loan to value.
This is what I was talking about, the computer and him. He's so black and white. I love it.
But some people don't understand that. You start throwing.
So you go combined loan to value, right? So when you use a down payment assistance program, your combined loan to value is basically 103% of the value.
Right.
So it might take a little bit longer for you to appreciate to where now you do have an equity position, but
right. So if you're looking at a graph, you would have a house that's $100,000. Your loan to value, right? So let's just say you owe $80,000. Your loan would be $80,000. Your house would be $100,000.
Yeah.
So that's 80%. Yep. 80% loan to value, LTV. Now you have if you owe 100%, then you're gonna owe 100,000, right?
Yeah.
So that's 100% LTV. So when you have your combined all the loans, including your second and your third, you're gonna have 105, 1,000. You're gonna owe 105,000, and your house is only worth 100,000. So you're gonna have a CLTV of 105%.
Gotcha.
Absolutely.
Or you could have just Googled it next time. You are a millennial, aren't you?
You're a millennial. You can Google it. No,
Not compute.
cannot. No, but I mean, for me, I talk to people about like comfortability, right? So comfortability. When I qualify somebody, I qualify them and I say, hey, look, here's your max, but you want a comfortable payment of here. Here's what you need to be looking for.
A comfortability. I think you know that. I mean, you can have. You can have $90,000 in the bank. 20% down is going to get you is going to be $89,000, right? He's going to leave the borrower with $1,000, right, in his bank account. Is that a good situation? I don't know. It's the comfortability.
Right.
If it's a 92-year-old or sorry, a 78-year-old,
absolutely,
that is going to be the best possible option. Why? Because they want the lowest payment possible because they're on a fixed payment.
See, I almost said no, but
well, it's no most of the time. It's usually, but you're talking about comfortability.
Yeah,
it's English is my second language. Sorry, comfortability.
English is my second language too. My first, my first language is food.
I'm usually on beast mode. So in most cases, no, but you're talking about comfortability, like that would be an instant where it would be perfect.
Right.
You have a client that is just really, for me, it's like, no, don't put anything, dude, just put the minimum down, right? Just put $6,000
I would rather have that money in the
and
bank.
keep the money in the bank. But for somebody that's 72 years old, that's on a fixed income,
they want that payment as low as possible.
When they make, $1,500 a month,
well, we just had that too.
You want the payment at $900, not
our one client is like, you know what? I'm gonna buy this $800,000 condo. I have enough to buy it in cash, but I'm 82 years old. I'm getting rent that's gonna cover all this other stuff. I'm just gonna get a $400,000 loan because a $400,000 loan is what I'm comfortable with. But we sat and talked with her. Okay. If you put down 200, here's your payment. If you put down 300, here's your payment. 400, here's your payment. Okay, this is what I'm most comfortable putting $400,000 out of my pocket with, and it's going to be a monthly payment that I'm comfortable with, to where my rent check and Social Security is basically going to cover that, right? So, like, that's kind of the cool thing. Like, when we sit down with somebody, we're not just like, hey, here's a pre-approval letter for your max, go for it, and then all of a sudden they get a contract. It's like, look, here's where you want to be.
Which one do you want?
Yeah, here's where you want to be.
Before disclosures go out.
No, too late. I already did it.
We have 3 days to disclose legally, and
I already did it. You're locked in this payment.
And this is kind of dumb, but we have these lenders out there that are like that, and they're transactional, or their team takes care of it, and it's just kind of unfair for the client, and so in reality, if you're an agent and you're not using not necessarily me or you, but someone like us with the same approach,
right?
They're going to be missing out, and they're really kind of, it's going to sound harsh, but they are kind of not adding the true value that they should.
And what they're doing,
putting in the customer in a bad situation, or not even a bad, not in the best possible situation.
It's not in the best interest of the customer. Not
the best interest for them, no.
Right, they're going after the commission check. Let's face it. So anyway, I think we got a lot of good value out of this episode, so I think we're going to go ahead and wrap up here. But for you guys that have been watching us, just so you know, there's not going to be very many podcasts with this backdrop, because we are going to be at our new location coming to Temecula. We're going to be right on the corner of Winchester and Jefferson. Super excited about that. A lot bigger space, and this team is growing. If you are interested in being a part of it, I ask that you give me a call. We'll put my phone number in the link of the bio. I got Lottie on board. I'm super happy, super excited.
Snow cone machines.
We got snow cone. We're doing full coffee bar. That's right.
Yeah. Why have a good lender? Why have a good lender? Why have a good lender when you can have a lender with a coffee shop?
Why would you? No, but for real, I mean, we're super happy. If you have any questions, please reach out to us. Real estate agents, we have a lot of good programs. Loan officers, we have some awesome stuff coming out. That is for free. Well, the company pays for it. You don't. But we would for sure subscribe, so that way you could be the 8th member, the 9th member, and the 10th member of the Two Mortgage Guys team. Yeah. Appreciate it. Thanks so much for tuning in. Have a great day.